The market is trying to find its footing. It's trying to put in a bottom. And so one way to play that is through ETFs. And so today we're going to be looking at where that money is flowing right now in the market and pick out some of the best ETFs to buy now for November. Let's get to it. At MAPsignals, you guys know we're all about the data. Our portal has a new look, but here's the deal. Here's the big money index. It tracks these unusual volumes in stocks. We can see that the BMI, it was oversold. This is in October. Now it's starting to rip higher. That means that money is moving into the market. You can see that over here by looking at the daily counts, right? These are stocks. More stocks are getting bought than sold. That means stocks are going higher. So you might be asking yourself, all right, which stocks? Well, let's go ahead and look at the sector ranks. And these are the areas that I'm going to be focused on for this video. Energy is the #1 ranking sector, followed by industrials, staples, financials, and healthcare. Those are the 5 areas that I think are positioned to do well over the near and medium term. So let's keep going looking at data. We are looking at our ETF module here, and I'm looking at XOP. This is a SPDR S&P Oil and Gas Exploration ETF. It's got a bunch of stocks in there. You can see their weightings and see some of their scores. I'm going to be picking a name out of this basket of stocks. Then we're going to head over for industrial exposure, and we're going to be popping in XLI. This is the Industrial Select SPDR ETF. A lot of names, a lot of industrials. That's where some money has been flowing. Then we're going to be looking at consumer staples, big fund XLP. This is a Consumer Staples Select Sector SPDR fund, excuse me. Lots of names, lots of brands that we know. Then we're going to head over to the financial sector, XLF. And you got a lot of banks, you've got a lot of insurance companies. They've been benefiting recently. And then last but not least, we're going to be looking inside the healthcare sector at the Healthcare Select Sector SPDR Fund. Because, listen, these are baskets of stocks. And if those stocks are poised to go higher, then the fund should participate as well. So at this point, we know the market trend has gotten a little bit healthier. We are starting to see buyers step in, and we've got 5 ETFs to look at right now. I'm going to get into that in a moment, but let me ask you to please like and subscribe to our YouTube channel. What we do is very unique, and we could really use the support. All right, let's get to the ETFs. So the first ETF is XOP, and this is the S&P Oil and Gas Exploration and Production Select Industry Index. So it basically holds a bunch of stocks, a bunch of energy names that are oil and gas exploration names. Now, if we look at the chart, there was a lot of big money that went into this fund back in February and through March, and that preceded a big rally. Now you saw that there was a big sell-off, right, as people were worried about recession fears. And then lately we've seen one more of these big money signals. So chances are there's a little bit more upside in XOP. But what I like about it is it holds great energy companies. And one example is ConocoPhillips, ticker COP. And if we look at all the big money signals here, there have been quite a bit of green signals, right? Money is rushing into the shares as they're going higher. Had that sell-off, but recently you're starting to see more of that power signal. And then what these blue signals are telling us is that COP was one of our highest ranked stocks multiple times throughout the year. And if we look at some of the fundamentals, well, we see that 3-year sales growth is at 30%, basically. It's got a profit margin of 17.5, forward PE of 8.8. And get this, it's got a forward dividend of 1.5%, and it's got free cash flow of $11.6 billion. So very solid company. All right, for the #2 ETF, we're going to be looking at XLI. Ticker is XLI. This is the Industrial Select Sector SPDR Fund. And look, the chart is not that pretty, but you know what? In a bear market, pretty much nothing is pretty. But you know, when you look at industrial stocks, they're going to hold names that are, you know, shippers. You're going to see some defense companies. You're going to see some tractor companies. And that brings me to why I like XLI, is because it holds farm equipment name, and that's Deere and Company, John Deere. Okay, so this is ticker DE, and it's got a pretty strong score of 79. And if we look at the shares, a lot of big money went into the name earlier this year, and we're starting to see that trend recently. We look over here, there's been many power signals in this stock. So chances are, if you believe that there's going to be need for tractors, Deere could be the way to play it. I really like that they have 1-year EPS growth of 13.4%. They also have a nice profit margin of 13.6%. Forward PE is not that expensive at 17.3. For the number 3 ETF, I'm looking at XLP. This is the Consumer Staples Select Sector Spider ETF. And this one has had some bumps. You get a little bit of inflows, then you see money coming out, a little bit of inflows. Recently, we've seen that the ETF has been under pressure rather, but you are starting to see some relative strength. And that's because some of the companies that it holds, right? Big staples companies, brands that you and I use likely on a day-to-day basis are doing relatively well. And that's why I'm looking at Archer Daniels Midland. This is a company, it's an agriculture name. They do a lot of commodities, oilseeds, corn, and the chart has just been absolutely strong. Very powerful earlier in the year. You saw some selling, but now it's back at highs. And we know that it's a quality name because it has been one of the top ranked stocks multiple times this year. But here's a couple of things that I like about this stock is the 1-year sales growth, 32%. It's got a profit margin of 3.2%, which isn't that exciting. It's got a forward PE of 13 times, and it's a decent sized company at $53 billion. Also, I would say it's got a forward yield of 1.6%. And I like cash flow, $5.4 billion in free cash flow. Technicals are very strong on this one. I like this name. All right, are you having fun? Because I am. The number 4 ETF, it's another big one. This is the XLF, that's Financial Select Sector Spider Fund. It's got a bunch of banks. It's got a lot of insurance companies. Basically anything financial is in here, Berkshire Hathaway, big companies. So ETF definitely has been under a lot of pressure this year. I mean, what sector hasn't? But if we look inside of it, it does have a cool stock that I've been looking at, and that's Progressive Insurance, right? They've got car insurance, home insurance. Cool thing about insurance companies is they take all those premiums, they take that float, they reinvest it into bonds, and with interest rates continuing to rise, they are going to have better profits. You look at the chart of this stock, hasn't had any red signals this year, and that's rare. In a bear market, it had some of those power signals. But let's look under the hood a little bit more. 1-year EPS growth estimate is at 54%, right? So the whole insurance complex is doing very, very well. It's one of those subsectors that you want to keep an eye on as rates are rising. It does get dinged because of a forward PE ratio of 31.7, but let's see what else that this company has. It's got a small dividend, 0.3% yield. And overall, it's scoring very well on technicals. I do like the insurance space. Data is cool. Let's look at XLV. This is a number 5 ETF, and this is a healthcare select sector spider fund. The price is right around $133. And look, it's kind of been chop city throughout the year. Just had a little bit of selling, but it is starting to show some relative strength. And again, it's one of those top sectors that I showed you where I think there's opportunity. And you know what? It's defensive. No matter what the economy is doing, people are going to be spending on health costs. One stock in here, full disclosure, I own this in personal accounts. It's AbbVie, all right? It's a big biopharmaceuticals, got a big dividend. Stock price is right around 146 bucks. But look at this, tons and tons of big money went into this name earlier this year. It had some selling pressure, what stock didn't, but it's starting to see some of those big volume signals that we like to see. We know that it's a high quality name, right? People are rushing for yield right now. And check out some of these stats. 1-year sales growth, 22.7%. If I had to ding it, the 1-year EPS growth estimate is a negative 15%. It's got a forward PE of 10.6, so it's relatively cheap. It's got decent technicals. And if we look under the hood a little bit more, it's got a forward yield of 4%. And get this, free cash flow of just about $22 billion. Wow. So even in this bear market, there are opportunities out there. Look, we are seeing some relative strength in energy. We're seeing it in industrials, staples, financials, healthcare. These are great ways to round out a portfolio. Remember, always do your own research. None of this is personalized advice of any kind. Just want to make you guys smarter with data. Make sure to like and subscribe to our YouTube channel if you like this unique way and how we look at the market. I'll see you guys next time.